By 2026, investing is no longer simple. Stocks feel volatile. Real estate feels out of reach. And even digital assets feel uncertain. So investors ask a new question. Where can value hide and still survive? Traditionally, the answer was gold. Gold has thousands of years of trust behind it. It doesn't depend on technology. It doesn't disappear overnight. But gold has a weakness. It just sits. You can't wear it. You can't use it. And moving it isn't always simple. Then came crypto. Fast, digital, orderless. For a moment, it looked unstoppable. But volatility changed the story. Prices swing on emotion. Rules change. Platforms fail. Trust became fragile. That's when investors began looking at a third option. Rolex. Unlike gold, Rolex is wearable. Unlike crypto, it's physical. It doesn't need electricity. It doesn't rely on apps or exchanges. And its value doesn't vanish overnight. A Rolex can cross borders silently. It can be sold globally. And it carries instant recognition. But there's something deeper happening. By 2026, a new generation of buyers has entered the market. They grew up digital, but crave something real. To them, ownership matters. Physical proof matters. A watch feels permanent in a temporary world. This generation doesn't buy Rolex to flip. They buy to store value and identity. Gold is still respected. Crypto still has potential. But Rolex sits in a rare middle ground. Stable like gold. Portable like cash. Desirable like art. And there's one more factor pushing demand higher. Supply. Rolex does not scale with population. It does not react to market panic. It does not rush production. Every year, more buyers compete for nearly the same number of watches. That pressure doesn't disappear. It compounds. This is why, in the next decade, Rolex ownership may become less about luxury and more about access. Who gets in and who doesn't? Because when assets compete, people don't choose what's loud. They choose what lasts. And sometimes, the strongest investment is the one already ticking on someone's wrist.